All right, checking. Yep, live on YouTube. Hey to YouTube. I hope everybody's good. Me and Jeremy are on here just talking about what was it called, Jeremy? That the people who just declare bankruptcy, Virgin Orbital, and how the stupidity of following Kramer and the things he comes out with. Yeah. Hey, Jeremy, I'm having a really hard time hearing you, man. And my settings are all set up the same way as they were before. Is it possible that it's on your end? So I've got the four indices up, or four. I've got the NQ up for Nasdaq, the RTY for the Russell, the ES for S&P, and then the MYM for the Dow Jones. It's also, they're all the continuous contracts, so we can have a look at how they're all performing relative to each other. And I find that a lot of times it can give a pretty good indication. This morning I traded, I obviously sold too early, but I traded a really quick scalp on RT weakness, which was, let me see if I can find it. It was here. Yeah. Yeah, I can hear you. It's just that it's just pretty quiet, which is just yeah. So basically here, this I traded this morning. Nasdaq came up, tried to make a new high, failed. I was in for the new high, but trading it as a double top. And then when I saw this candle, I got in. Noticed that it was also weak on the RT. You can see the SPY, while the Nasdaq was trying to make a new high. You can see that the ES or the S&P was failing to make a new high, which is generally a sign of weakness. And the same thing on the Dow, which is, as everyone knows, the 30 largest, or not only the largest, they're actually not the largest, but the 30 stocks that are established and they consider that they want to have in there. You can see also that there was a lot of weakness there also. So I'd mostly trade the NQ because that's what I prefer. And when I could see that there was weakness in the three other indices, I figured it was a pretty safe bet to take a quick scalp on this one. I traded it for that, and then I got out really fast, actually. It was really a small trade. And I obviously should have trusted it a little bit more. But hindsight's 20/20, and that's what it is. Unfortunately, I didn't. I might have traded this if I had gotten back into it there, but I didn't. I had to work on some other stuff, unfortunately. So I wasn't looking at the chart then. What are you thinking about today, man? Yeah. Yep. Yeah, that's kind of what I'm betting. I'm a little bit hands off at the moment, just because I feel like uh, I don't. There's no really perfect setup right now, and I can't. It's not a really good. I mean, this thing could rip up to the upside and just take somebody's face off, and it could just as well have the bottom fall out from underneath it. I don't think there's any news today, huh? There's non. Wait, there's one news. There's the jobs report. Um, no, you sound better now. You know what? It's just surprising because the volume was really good before, and I didn't change anything. So, but let me see. Let me check one more thing. If anybody else could jump in and just say if how they think Jeremy's sound is. Oh, wait a second. Can you say something now? Oh yeah, there we go, baby. I got you. I got you full volume now, man. All right, that's what it was. It was my end. Yeah, oh, yeah. Sorry about that, man. No, you're all good. It was my bad. I didn't realize I had two um, Discord for some reason has two in the volume mixer. It has like two entries. Yeah, but now you're sounding perfect. You sound like you're like your normal lovely self. Um, yeah. So what were you say? I didn't mean to interrupt you with that. But so you were thinking? I'm thinking, just for the sake of it, we have this high from yesterday. We're heading towards it now. Wouldn't be surprising if we bounce right off that high. Um, that would kind of be normal. The same high. You can see that high from yesterday wasn't at all. The RT just fell off a cliff yesterday. So we're heading back down towards the afternoon high, which is when the Nasdaq put in a new high, and you can see it was kind of like an odd one. The Dow pretty much made an equal high, give or take a couple bucks. Uh, the ES didn't manage to break it, and then broke it this morning in the pre-market. But the Nasdaq just ran right through that thing. I mean, not with super conviction, but it's a good 10-point difference there. Uh, so right now I'm looking at coming back to that high, and you can see that the RT is also coming back to pretty much the same point. But I'm thinking I'm just as a rough idea that the RT might define the range today. So it might bounce between this high and that post after the market opened high yesterday, which occurred. I think that was at like 10 o'clock or something. So that this might be the range that we set actually for the day, but it's going to play out in the other indices also. We'll see how that plays out now. Let me see. I have to go up and. Mm-hmm. Oh, let me see how you're getting on. You're getting that like you're just connecting those two. Let me put it up on the chart here so everybody else can see it also. Um, oh man, they keep playing out, huh? I don't get mine. Well, we don't get the. You're doing it on SPY and I'm doing it on the ES, so it doesn't match up exactly, but it's pretty close. What was that fan line from? That was from an. Yeah. Yep. Oh, that's good stuff, man. I'm still. It's funny when you have this little bit of divergence between the ES and SPI that it doesn't. It's hard to set up the same lines. But go ahead. Yep. Yeah. Let's do that as an experiment right now. I actually don't do a lot of looking at SPX, so I'm going to compare SPX to. Let's put them on top of each other. Wait. Let's do them like this. SPX. That's actually a really good point, man. I should be looking a lot more at SPS, or I mean, whatever the NDX or SPX or whatever it is that. Oh yeah. Yeah, they match up pretty. I mean, I need to sync these. Let's see. We're not going to sync the layout. Okay. How much divergence are there between these? I mean, these must be like so close that it's ridiculous, right? Uh, yeah. Yeah. Yep. You know what I'm realizing? I'm realizing that the people on YouTube aren't hearing the same thing as you, so it just sounds like me. I wonder. I'm trying to figure out how to. I have sources. Um, sources. I have. Yep. And desktop. Let me just get this. Mm, you know, I actually don't have desktop as a. Oh, I do. I do actually. It's just that it's not registering you for some reason. Let's add another one. I can add application. And that's in a beta version. Let's see what it does though. One second, man. Sorry, I'm just gonna try to see if I can get this set up. It's funny how many small errors can come into something like when you're trying to set up these streams for the first time. It's like everything is. Can I do a media source? No. Properties. Discord. Yeah, I'm taking from Discord. Let me take from. No, no, no. You sound perfect, man. It's not. This isn't on you. This is 100% on me, man. I just need to figure it out.
Hey,
Hi, you guys.
Morning.
Good morning.
There's the bell.
Ding,
Let
ding,
the
ding.
volatility begin.
Oh yeah. All right, I'll work this out later.
Yeah.
Switch back to these ones. What do we have at the open? We have a quick spike off the open, coming up off that trend line, which is the channel on the NQ. The same thing on the ES, which is I have directly below there. I'm not expecting any big moves on this until, yeah, well, I'm not expecting any big move today at the open anyway. But let's see what it does.
And
Uh,
I am keeping my eyes on energy, by the way. Since OPEC decided to slash output,
yeah,
that's
that was a
going to
funny one,
affect
huh?
price. Yeah. Well, I mean, it was expected because of all the saber rattling and a bunch of stupid policy stuff going on. But what do
Yeah,
you want, you know?
yeah, no, completely, man. It's look, it's pretty horrendous what they're trying to do. I mean, that's such obviously a play just to screw with
Yeah,
the U.S. economy. You know what I mean? Oh,
of course.
inflation's coming down a little bit. Let's jack it up again. you
Yep.
know? Uh,
But- And if you look at like USO, if you look at the daily 200 period,
hmm
it gapped exactly to the 200 period. So that's kind of a call a foul ball here. It's parabolic. It's gapped up. There's got to be some sort of pullback on that. I think that was an overreaction more than anything.
Yeah. Here you can see the Russell is falling off, like not crashing, but it's coming down at the open.
Yeah,
Same thing with the Dow, but tech is still holding up and trying to pull up. Let's do a quick. You're saying energy. Let's just check what's happening at the open from.
you just look at XLE.
Yeah, yeah. That's what I'm. Let's turn this to. Let's turn this to the 30-second.
Dude, look at
It's
that
not enough.
pullback. Wow.
Yeah, but check out Nasdaq is still holding up, man. This would be a moment that I'd like to short this, but I don't trade the first. I'd like to short Nasdaq here. I don't trade the first. Definitely not the first 5 minutes anyway.
SPY brushed that angular support at the base of that channel, and then now we're into the liquidity zone from the daily chart.
Yeah, let's take the daily chart up really quickly. We can get that. I was trying to plot things out, and then I did the same thing that you did yesterday. I erased all my
Oh
all my drawings. It was good. It was one of those moments.
My stuff was lagging pretty hard, and I was like, dude, I got so sick of it. I'm like, you know what? I'm just gonna rip this down and start over.
Yeah. Well, I think you should. I mean, I think you should move on to a different platform than Webull. I know
Yeah,
that.
possibly.
I just think it's that's giving you some problems maybe. I mean, it's not made for an advanced trader specifically, you know.
Right, right.
And
I just love it because it's such an easy. Well, it has been such an easy platform to draw on, and be able to quickly zoom in and out of the price action and stuff like that. So
yeah,
that's the only attraction I have to it. Really, is that it's just simple,
yeah,
real easy,
yeah,
fast.
yeah. I mean, TradingView actually is really quick, man. I mean, you could definitely this would suit your style well, you know.
Yeah, I like TradingView.
You can see that was a pretty good point to short that if you were going to, but and again, you could see that at the open, everything Russell fell off a cliff, Dow fell off a cliff, as did the ES, but the Nasdaq pushed while everything else was going red, and that's a really great point just to take a quick scalp on these. What did that end up being? 16 points or something like this. Yeah. I suppose I should shut out. That trend that I got it there. It's just really faint. For some reason, yeah, you can barely see that liquidity zone there. But it's bouncing up into it now. Let's see if it gets out of it.
Right.
I have it ending at 4. Yeah, 415.
Yeah, I've got a couple of red hammers right in the upper edge of the liquidity zone, so it might bounce here for a moment.
Oh. And we can see the Dow came down, nice little V-shaped bottom there. Kind of rejected off that zone, came right back into the previous channel. I'm going to look at the Russell, as I always like to do, for the indication.
Yeah, I'm looking at IWM right now.
Yep. I'm just going to leave that standing still for a little bit. What do you think,
pardon
Jeremy? No, man, I'm tired today. Also, I was up all night working again, being stupid. But
I know it. I know you work too many hours, man.
I don't know what it is, Ben. I can't stop. I'm a little bit of a workaholic. I just want to, I go. And then when I go to bed, I put on like technical analysis books and like fall asleep to them.
Nice.
I wake up in the middle of the night and I'm like, oh, I'm on that chapter again. Yeah.
Awesome.
Yeah, it's kind of fun anyway. The kids think it's funny. They hear they just like, they come in the morning and the book's still going. And the oldest one is starting to get it, which is pretty cool. I'm going to set him up.
I forgot to mention this earlier in the week. Friday, the market's closed this week for Good Friday.
Yep.
And it'll have an effect on the options chain. So like you'll notice that the April 6th expirations will act like a Friday expiration. They'll lose value really quickly on SPY and Q.
Yeah, and there's some news. Non-farm payrolls is coming out on Friday also, which is kind of funny. That's going to be that's a weird one.
Monday's going to be hella fun.
You don't think they'll price in an expected, like, well, you can't really price in what you don't know is going to happen, but you don't think that's going to dampen down? They know that nobody's going to want to risk being in the market for that Friday news, especially with the 3-day weekend. So that's got to have a pretty dramatic effect on things also, huh?
Yeah, Thursday could you could see a lot of that liquidity kind of evaporate very quickly.
Yep.
That's kind of got an expectation that if that does start to take effect, that liquidity zone covers, let's see here, the top edge is like 411.50 where we're at right about now.
Yep.
And the bottom edge is all the way down to 407.30. So that is quite a bit of money to move out of the market for SPY. So.
Oh, yeah. And we can see that NASDAQ coming right back up into that channel that was established earlier, breaking back into it. The ES right back on it. Dow failing to... Dow didn't really make a channel. Oh, yeah, it did. Dow broke up into it, but the RT is just completely failing to get anywhere near it, which is kind of a continued bearish indication. And you can see that's going to play out right now.
I want to see something real quick here.
What are you checking out?
I'm wondering if the UNG contracts are going to start moving again.
LNG or UNG?
UNG.
Hmm.
Because I mean, anytime you have some energy imbalance, natural gas kind of tends to move one way or another.
I thought natural gas was LNG.
Well, LNG is liquefied natural gas. It's the abbreviation for it, but I don't know that that's going to be a ticker that is relevant. Let me see.
Yeah, okay. The ticker is UNG. All right. I get it.
UNG. UNG is a reserve or a fund, the U.S. natural gas fund.
Yeah.
It's kind of an ETF that's, well, it's just sort of there. But if you look at it, it can be a widowmaker. If you zoom out on a daily chart, I mean, that thing move pretty quick.
Yeah, and the tick size is nothing. What is it, like $50 for each tick or something like that?
Oh, for natural gas futures, that's a different story. But for UNG, it's
for the ETF.
Yeah.
It
trades a little differently.
Yeah. Okay. Let's try that. I'm gonna check it out. That indication from Russell played out pretty well. So it's like, look at the Russell, see that it's failing to make this high, coming up to. This doesn't really say much, but you can see here you have a slight pause on this. If I was down on the 10-second chart, it would look a little bit different. But it came right back up to that, failed it, and came back down, which was a great indication for trading NASDAQ. That, okay, this isn't going to probably this most likely won't make it either. ES also coming up on the resistance from the bottom of the previous channel. and the Dow coming up on something that double bottom it had said earlier came up, didn't quite make it. Also a pretty bearish indication. So it gave you a really good idea that you could short the NQ there pretty safely. And what is that? That's an 18. That's a 25-point move now. Just to say
Sweet.
I'm not trading this at the moment because I still haven't gotten to the swing of trading and talking. Chewing gum and walking isn't my thing. So,
It'll come to you.
yeah, it'll come to me hopefully quickly. But it's a little bit of a hassle. But it'll be good when it gets there. So UNG, I don't see any play right now. This is going to bounce for a little bit right now. So I would have gotten out of this if you were playing it short. Let's see UNG just for the sake of it.
So I'm looking at it below its 52-week low.
Mm-hmm.
Kind of at the bottom of a descending wedge there. If it can hold support at about $6.15 and go no lower, it can bounce there and come back through around $8 and then grind its way up to about $12 for basically a pullback in the bearish trend.
Wow, this thing looks like a penny stock, man.
Yeah, and the only thing hanging on it is the fact that when the choice comes for like European power supplies
Mm-hmm.
that go back to natural gas, particularly in Germany, to generate electricity for the summertime. I mean, it's weird to see natural gas go anywhere but down and sideways in the summertime, but in the current situation, I think the demand on it is going to come up this summer a little bit.
Well, they've capped the pricing in Spain is like the biggest.
Yeah.
Is the biggest consumer, right? And they've capped the price for them, so that they actually can't. They won't even be able to consume much.
Right.
And I mean, there's something to be said. I mean, I'm not. This whole thing really has shifted Europe's shift towards renewable energies. I don't know if renewable energies like solar, wind, and even nuclear is getting like a little bit of a better. From being like a nasty, no one wanted to talk about it. They're actually starting to talk about rebuilding out, building new nuclear plants, which is pretty amazing.
Yeah, and then there's the studies that have basically ramped up with the fusion.
Yeah, that's incredible. That's amazing, isn't it? They're getting close now. I mean, they actually, what is it, like 3 months ago, they had their first certified, 5 Sigma, we're producing more energy out than we're putting in, right? So, I mean, now it's just a scale process. Now which is awesome.
That'll make everything obsolete if it ever, is allowed to thrive.
Yeah. I don't see how they can stop it. You know what I mean?
No.
It's
it won't put oil under anything. I mean, we'll always kind of need oil, but you kind of wonder where that space is going to go. There's so much money in it. How do you get rid of oil? You can't.
Yeah. Well, I mean, I haven't studied enough about it, but it's also how much oil underpins. I mean, it's basically what you're saying, but oil underpins the economy so much in so many aspects that there's so many like, you take out oil in any way, and so many pins fall. You know what I mean? It's not only, you're not only thinking about oil as an energy source. It's also just like all the things that are tapped into it. And
I mean, your computer monitors, your phone. I mean, there's so many things made from petroleum products that people have no idea.
Yeah.
It is incredible how much oil goes into everything we do, not just energy.
Well, oh, go ahead. Sorry, man.
You go and come up with an alternative source of energy. Yeah, it's better for the environment too, but at the same time, there's a threshold to be crossed here. Yeah. That's where a lot of it is consumed, is in the energy space. So if you suddenly replace that with too much quickness, then the economy's really going to suffer.
Yeah. Oh, completely. I mean, I don't know. I think in the long term it would still be a good thing. Like it would still
Long
be,
term, it'd be awesome.
yeah. But short
In the
term, it's
short
definitely
term,
going to be. It's
it's
going to
going to
be.
hurt.
It's going to hurt a lot. Yeah.
Yeah.
But I think that's going to be part of it. You know what I mean? I think that's
Yeah.
going to be, how innovation is going to be always going to be the way that we get out of any crisis. You know?
Yeah. That's
So
it. What is it? Necessity is the mother of invention.
yeah,
And then there's the Band-Aid has to come off. So
yeah,
know.
yeah. It's gonna be vicious though. That's gonna be a.
Yeah.
But you can't really invest on ideas like that. You can't.
No.
I'm not gonna. I mean, well, you could do natural gas now, but it's not really a long term. You're not gonna play it as a 10, 15-year bet kind of thing.
Right.
Though I suppose at levels like this, if you were to buy natural gas right now, I mean, 15 years from now, I don't see natural gas being at $6 again anyway.
Yeah. I mean, it's got to bounce a little bit here because the demand is certainly creeping up a little bit. So
Yeah.
just in the short term, like I said, it's kind of odd for that to happen in the summertime, but I mean, it's cleaner than burning coal.
Yep. Yep. Although they have these new coal plants now, which are actually super clean, huh? It was
Yeah, the gasification plants or whatever they call it.
that was the one. Yeah, I thought that was cool. And they're actually taking the methane out of the ground and like powering the coal plants with methane, which is
Yeah.
removing the methane from the atmosphere, which is good. And I thought that was they're starting to get smart anyway. Here we have. I would say this looks like a little bit of a risky place.
Yep.
That looks like it's falling off a cliff, but this looks really trappy to me. I mean, on this short of a time frame, it doesn't really matter so much. But this is starting to look like all it needs is a right shoulder here, and this turns into a pretty clean inverse head and shoulders. But
Yep, I'm watching that close on the 5-second chart.
yeah, let's switch to the 5-second chart and check it out. Oh yeah, it looks nice on the 5-second chart, doesn't it?
Beautiful.
The Russell kind of put in a base like this, and then the Dow, which basically let's just call this large caps for the sake of it, came down, took out some liquidity down there, trapped some bears, and then let's see what it does. If it manages to do this right shoulder on, if tech basically manages to do this right shoulder over here. The ES has it also nice, huh? Yeah.
Oh yeah.
There we go. That's kind of a right shoulder, isn't it?
Yeah, I'm watching all kinds of other stuff too, so
Yeah.
I'm a little distracted. But yeah, this is where the right shoulder would be, and if it doesn't break the resistance point at about 410.80 with some force here, it can still break over as a bear flag. So
Yep.
it's one of those things where you get that reversal pattern. A lot of people get sucked into that and it becomes a trap, and then boom, it just gets sold off.
Yep.
That's what it looks like to me. But knowing where that key resistance and support point is when you start to see the right shoulder channel like this, crucial. And that 5-second chart is just awesome for spotting exactly what it's doing in between the 1-minute candles.
Yep.
And
Yeah.
actually,
Really.
we got a little bit of a wedge on that right end.
Oh, there you go. It's forming like it's forming like a shoulder on this one.
There we go. Now we got a shoulder.
Yep.
So like knowing exactly when to play that as a reversal and exactly when to play it as a trap
Yep.
is clutch. And that's where that 5-second chart really shines, man. You can pick off your entries and exits just methodically with it.
Yep. Here we can see weakness in the Dow still. This NASDAQ trying to pull up, weakness in the Russell, weakness in the Dow, and I would say this candle is make or break right now. So I'd wait for this candle to close before taking any trades on it.
Yep. Yeah, definitely hang loose until it confirms.
Yep.
We're not quite at the next resistance level, which is your left shoulder high, which is about 410.96.
In the NASDAQ, we broke through it.
Yeah.
Let me see. Oh, that's right. That's going to be the crucial. Here we go. That's it. They're
Here
tapping
comes SPY right up to it.
tapping
Yeah.
it now. Yeah. Let's see. I'll put up a line on that. Let's see if it can break through that one. That would be that's a great. If SPY also breaks through that, it bodes well for a little bit of continuation. But it doesn't look like it's going to make it, huh?
It might not. It might still be a trap. I mean, we got the 1-to-1 out of that wedge on the right shoulder. That's
Yep.
done. Now we're just waiting to see if this is going to continue to consolidate or if it's going to break over or break out. This is ranging right now, so we could get another 1-for-1 out of this, which would put us at about 411.15, or we can get a 1-for-1 down, which would put us down about 410.62, 410.60.
I guess that's what's the difference now between? I should look that up. What the difference right now is between SPY and let's see, 410. Yeah, I could have just done it off what you said. So it's about $50 right now.
Mhm. They're getting closer to correlating them, but
Yeah,
you know, you just have to remember SPY is supposed to track the futures. It's not supposed to be the other way around. So, let the futures lead. But
I thought SPY was supposed to track SPX.
well, it's more or less supposed to track the index. So yeah, SPX. But the futures are supposed to be where everything kind of comes together.
Yeah.
It's a mess.
It's a mess. there's no rhyme or reason. But
No.
we see that the Russell is breaking down beneath that. This would be NASDAQ coming back up on that line that it rejected before. I would take that as a reasonable short point, possibly depending on what the other charts look at if it gets up there.
I'm kind of all over the place this morning anyway. I'm watching a news ticker with a whole bunch of like upgrades and downgrades going by, like Piper Sandler talking this and that about everybody and their mother.
Yeah. Are you doing money.net or is it, what is it?
Yeah, that money.net ticker.
Yeah.
It's off of their streaming news ticker.
Yeah.
And they upgraded, let me see, what is this? Blue Owl Capital from 17 to 18, maintains overweight rating, Piper Sandler increases price target, American Financial Group,
Mm-hmm.
to 170 from 166. It's just simple stuff. But when you see a lot of downgrades all of a sudden, and you go look at the chart, and it's like, well, hey, wait a minute, there's a reversal here.
Yeah.
When you see that downgrade, it's almost as if it's designed to be a point where institutions can buy from panic sellers.
Yeah. I mean, that's what it is, though. I mean, it's always
Yeah.
like, who's going to freak out? It's like a little bit of like a game of chicken, Who's going to
Yep.
freak out first? And
Absolutely right.
let's see if it
Just
rejects.
exactly like a game of chicken.
Yeah. So now what I do here is, now we got up to this previous channel line, so which it rejected off of before. So we could look at it as a possibility of rejecting off of it again. We can see that the ES is coming back up into the liquidity zone now. So as always, I'm going to look over to the Russell, see if it can give me a little bit of a forewarning of indication of what it's going to do. And what I'd like that to do is when this gets up here, when the NASDAQ comes up to this previous channel line, I want this one to show some I want the Russell to show some serious weakness to let me know that I could get into this and short it. And I wouldn't mind seeing the same thing coming across in the ES, which it's kind of rejecting off the bottom of that zone, some weakness there. And there's that rejection off that line. I can't trade those fast moves like that because I'm just not fast enough for them. So I'm going to wait.
Consolidation, but it's looking like strength is building here.
Yeah.
We're just above that left shoulder. Give this a moment. They can still wreck this. There they go. Bam, they sold right into that.
Yeah. And that's that short. NASDAQ came up to that line. shorted off that. There's that new low in the RT that I was hoping for. Let's see if there's a
Yeah.
little bit of follow through on this.
So they love flipping stuff like that. That trap is just methodical. And then if you look at SPY, you've kind of got a topping pattern that's almost followed through here. See if I can pull it up on maybe a 15-minute. No.
Nasdaq is just being super strong though, huh? It's like there's really a lot of buyers in there someplace.
1, 2, 3 trend days.
I thought we were on 5 or something crazy like that.
From the base. Yeah, we are on 5, but we're at the end of 5.
Yeah.
This just feels like a blow off top type of thing, but
Switch out to a higher time frame.
I'd be happy to be wrong about it.
Yeah.
But
it feels like it, right? And this is like a normal, this is exactly what it's supposed to look like when it is a blow off top.
Right.
Is I'm on the 1 hour.
That's it right there. You got that little double top on the 1 hour.
Yeah. And it comes up and then kind of plays around with it, comes up really quickly, one candle up and out, traps some people who wanted to go long right here, gets them in and then flushes on them. The traditional place to short this, if you were going to look at it like that, would let it come down, let it prove itself come down, and let it come back up and test this line or this line, basically. That's a kind of a longer term way to look at it. So come down beneath this, come up, test it, and then short it there, and then let it continue down. But we can see, look at this, when you compare the Russell, what the Russell's doing right now on the 1 hour chart in comparison to everything else, that's insane. It just, but this is also, it retraced its entire pre-market move now, pretty much. No, actually, this is from yesterday, midday.
Yeah. Yeah, it's retraced right to the middle of that route.
Yep. Let's switch back down to a lower time frame chart because that's where we like to see our goodness. See the goodness.
See the quickest scalp you can get.
I actually look at that Nasdaq coming up, breaking up through that anyway.
Got a straight up. Oh man, no, this still feels weird.
Yeah.
Like even QQQ's got that 1 hour double top, but it's a lot cleaner looking than SPY.
Yep. I still think this looks trappy, but let's look at it. Look at that clean, come down, comes right back down to this.
Straight up V bottom right there. Oh, there it is, descending megaphone, and then it broke. So we got a 1-for-1. We'll stop at about 11.25. Or 411.25 for SPY.
Yeah, so 411.25. Oh, they're getting closer. Okay. I'd look at this to come up to. I have these are volume profile POCs that I have put out from earlier, and I think actually I should have color coded them differently. This is actually sorry, they're not. They're these previous highs from yesterday.
Yeah, this.
But we're still in this big liquidity zone on SPY, huh?
We are. We're under the top edge of it.
Yep.
Yep. You got the same lines.
This would be a great place to reject, though. Come up, and then reject, and then just flush, continue the downtrend.
Yeah, it would be a beautiful bear flag right there.
Yep.
Didn't quite lick that 411.25 like we expected, but we got 411.18, which is close enough. Now we're back to that 410. 411 pivot there.
Yep.
Where that right shoulder was, or where that left shoulder was previous high. Whoa.
Whoa. That was news. Somebody said something.
Had to be. Had to be.
Let me check that. Somebody said something. Somebody wagged their tongue.
Finland officially joined NATO.
Oh, that's what it. No, that maybe.
Ouch. Ouch. What about Sweden? Cass, are you in as well?
Sweden's not within NATO yet, but they want to
Yet.
be. Yeah, well, yeah, it's planned. It was one of the reasons that I liked being in Sweden was that it wasn't in NATO because I mean, not anything against NATO. I think it's actually a pretty good organization, but I just like being in a country that actually was even like a semblance of independent. You know,
It's
and
better than the UN will ever be.
yeah, yeah,
Neutral.
yeah.
Yeah.
I think
There's an old saying among a lot of the let's not call them extremists of any kind, but just the people who tend to lean a little bit more towards freedom.
yeah,
They ever see blue hats, trying to police the nation here on the state side?
hmm
There would be a lot of bloodshed.
yeah. U.S. Oh, it was U.S. factory orders. This came out. I guess that's what it was.
Ah, there we go.
Yeah. Forecast. So factory orders are down slightly from what they expected, which means so the economy's getting weaker, which means they're going to have to. They might have to lower inflation rates faster than what they were expected. I don't think that. I don't think this. I don't think a rally on that news continues very far though.
No, I think it hit right to the 1 minute 200 period. And
Oh, did it?
reversed. Yeah.
I gotta start using the 200 like that.
And then my lower trend line,
Yeah, it came right
it's like
back up.
right freaking there.
Yep, it came up and it smacked right into the trend line.
These are some of the 1 minute fan lines from yesterday, y'all.
Let me see.
Post this. That blue line right there, that was the lower side of that channel. And it freaking went right to it to the damn penny and bounced.
Yeah,
It's hilarious.
that's funny, man. I got the same. I got the trend line, but I took it off the top of the channel from
Right.
from today.
Do it from either end, man.
Yeah.
And where they merge, you get divergence there. Then you get price action going the other way. It's just kind of crazy how.
That was a really good. I wish I had that line up also because then I would have been. I would have been just would have been a beautiful
Ready to
thing.
short it.
Yeah.
I've got a few. I grabbed a few QQQ put spreads right there, and just I'll sit on them till the end of the day probably.
Oh, nice, man. Did you manage to you managed to hit that and that just when it
Well, I was watching both SPY and QQQ hit the 1 minute 200. I'm like, oh hell no, I'm gonna grab that.
Yeah. Oh, nice one, man. Yeah, no, I really got to get better at trading while I'm talking.
And it's like you could go and do single contracts in this mess and be okay if you're quick enough. But if you want to really, really lower your risk and not have to worry about it so much, do a spread.
Yep.
Especially when it's this early in the day and you got a whole lot of IV crush happening.
Mm-hmm.
The spread will balance it so you can be on the right side of it and actually still lock in some gains on it versus watching the trade be on the right side, but watching implied volatility just fall off and destroy it, even if you're in the right position.
So when you put it on a spread like that, can you you basically build the spread beforehand, and then when you get into the position, it's a one button click to get into the position, right? So you can you see what I'm
Well,
saying?
for me, I can build it really quickly on Robinhood. I can just go and hit the plus sign
Mhm.
for sell one, buy the other, and then go to the next screen and I can set up my limit order. And I just set a limit order, and when it hits my limit, it fills.
But I mean, do you have to enter the position in separately in different legs, or when you do the spread, you can enter the
I
whole
just-
spread at the same time?
Enter the whole spread at the same time.
Yep.
You can leg into it, but it's like I said, if you can't capture that IV crush fast enough,
Mhm.
it will eat you.
Yeah.
So it's smarter just to grab the whole spread.
Yeah. So when you're doing it in options like that, one thing I'm wondering is if there's no like market order in options, right? So how do you work that? Like you have to pick the actual contracts that you want to get into.
Yep, you have to pick the actual contracts, and you have to set a limit order on the order.
Yeah.
And then you just got to know
You have to.
one thing.
You have to.
One thing that helps is knowing what the high low for the day was on those contracts before you grab them, so you can figure out the difference between the two lows, and then find out about where the ask is going to be when you get there.
Yeah.
So like if you have
Oh, I see what you mean. So you're
if you have two, yeah, if you have two strikes wide and you have a difference of like $5 between the two asks, you can kind of find some middle ground. So like typically in a $2 wide, I'm out of the money enough to where I can get it for less than 10 cents on a $2 wide spread.
Mhm.
And when I go in and set a limit order at like 8 or 7, I can usually get it to fill real quick with a weird number, because it's going to be buying the bid from one and selling to, or buying the ask for one and selling to the bid for the other.
Yeah.
So as soon as it flips down through that price range, I nail it. And then on that dip off of the 8 period there, I went ahead and converted to a condor. So I grabbed the call spread on top of it to protect it. So
Nice.
if it blows through one way or the other, I'll make some money. If it goes sideways, I can just close them off a little at a time. I can close the short legs a little at a time. Whatever I want to do, I can adjust this position. It doesn't expire till the middle of next week. So
Yeah. What's your max? Yeah, it depends on how you adjust it. I was just thinking like what's your maximum risk in a position like that?
So if I'm running a $2 spread on either SPY or Q, I never risk more than 10 cents on the spread.
Yeah.
By that, kind of take that with a grain of salt. Realize that I'm trading with a commission-free broker, so I can take advantage of little, $1 and $2 moves if I need to.
Yeah.
Whereas if you're paying commissions on that, you've got to wait for a $5 move minimum before you can make any profit at all on that. So, it's kind of I can cap my risk because I don't have to care about commissions.
Yep.
So it's like whatever I risk is what I risk. It's the whole number. It's not anything funny. I don't have to mess with it.
How do you think that's changed the market? And I don't mean like changed it for like individuals, but like how do you think like the no commission trading has like shifted just the way that the indices react, and
It's certainly brought a whole lot more participation to the market, and obviously that comes with volatility. So you get a lot more retail traders in the space, then your volatility goes way higher than it should be. So it's almost exaggerated, the volatility.
Yeah.
And then when you're trading options on there, like I said, you get a lot of the let me see how I say this. You get a lot of the institutional traders love to sell options against their existing positions.
Yeah.
And if it's got an inflated volatility index or implied volatility, they'll get more premium selling those options. So a lot of speculators tend to be on the retail side, and most of them are buying single contracts. They're not doing spreads.
Yeah.
If they made the conversion to doing more spreads, then you would have a higher volatility index in the spreads themselves, and you would see a bigger skew between strikes. Like you would have bigger jumps in the delta between, just literally one strike away. You'd see the delta almost go up 30%.
Yeah.
So if there's more and more volatility coming in and people start doing more and more spreads, it'll actually make that market space a lot easier to trade, because your price can have minimal movement and you'll make bigger returns just walking in and out of those spreads.
Yeah. Oh,
So it's a good thing for the volatility in the options chain. It's not necessarily a good thing for speculative traders until they learn how to do spreads.
Yep. And you have to do spreads. I mean, it's really if you're new to options, you should basically only be concentrating on spreads, right? That's the
if you want to minimize risk while you do it, yes.
And that's
because
that's basically what you always want to do. Minimizing risk is the whole game, right?
Right. That is job number one, is to protect capital at all costs. Not all costs, but try and be very nimble with protecting your capital at the very least. And then the best risk to reward ratio is going to come from a spread.
Yeah.
So it just makes it so that your risk is minimized to the point where, even if you lose 100% of that position, it's not going to be significant.
It's not so
won't-
painful.
yeah.
It's a great way to
Right.
learn also. I mean, like forget like making money, just like learning something so that you're not losing money at the same time. So you can take positions
Right.
without having to worry about losing your house, basically. I think that sounds
Right.
like a pretty good idea.
And then the other thing is, once you've gotten really good at trading those, then you can start learning how to adjust them, and that can mitigate your risk even more, because rather than just opening and closing positions, you can go and just adjust them. You can sell a spread against a spread. You can sell a contract against a contract. You can have all kinds of different ways to adjust leverage and capture profit in that position by adjusting it.
Yep.
So like, let's say price ran way up all of a sudden, and my short leg on the put side goes to like 1 or 2 cents. I can just go buy it back, and then I'm
Yep.
still long a long side, and it's basically paid for the difference between the long side and the put side and the short side, more or less.
Yep.
And then if price drops way back down dramatically, I can go and do the same thing on the call side, and then I can go and sell that contract back on the put side to capture even more profit. So it's like, if price trades in a channel with some volatility, a few dollars up and down all day long sideways, I can flip those short contracts over and over and over again and just literally generate income on a position while the price goes sideways.
That's great. It's awesome, man. It's basically doing what the institutions are doing, right? And that's the whole trick, which is
Exactly.
a great way to do it. I'm not liking
Can't beat
this.
'em. Join 'em.
Yeah, exactly. This
Trade like a market maker.
the short position is a little bit. I'd be a little bit worried about a short position right now because Russell's forming a pretty strong base here.
Yeah, there's a
Uh,
big pennant forming too, so it's like we can snap out. That's why I went on that dip when it tapped off that 8 period. I went and condored this thing into a neutral position.
Mm.
All it has to do is blow out one side or the other in general, and I can make a profit on that. But like I said, in the meantime, if it spikes up, hits a 50% retracement, and gets rejected, I can still take advantage of that because I can flip the short side.
and it's not gonna. We know one thing. It's not gonna stay here for very
Right?
long.
No, it's definitely going to get out of here,
Yep.
and it'll go one way or the other. Doesn't matter which way at this point for me because I'm neutral.
That's a nice way to do it. Just let's look in the higher time frames. What are we looking at? This is a pretty incredible pin on the or tweezer. I mean, tweezer on at the moment on the
Yep.
30 minutes. We have a pretty clean tweezer on the tweezer bottom on the ES. A pin on the Nasdaq with a pretty strong push up out of it. What is this pattern? I can never remember this. This is actually a pattern when you have the 3 candles, pin, big green candle, which is actually a bearish pattern, if I remember the right way.
If you think of it like a channel where it's a descending channel, it meets a 50% retracement of that channel
Mhm.
itself. Look at half of that trend.
Oh, I can put that on there.
It's a bearish pattern unless it breaks its 50% retracement right there.
Yeah. Oh, that's not giving me the 50% on that one. It's giving me the. See, this is the thing with this auto fib. I'm still liking this this tool, just as like a quick way to. But you have to switch the time frames. If I wanted to go give me an auto fib on this, I need to go down to the 1 minute. I guess will give it to me.
Right.
Yeah. Or the 5 minute. That's a little bit of an irritation. Yeah, there it is.
So I mean, for me, I don't even use the fibs because it can be confusing. I can just eyeball where 50% is.
Yeah, of
you know?
course. I just wanted to show off my new shiny tool, dude.
That's pretty cool.
I just liked it. But yeah, and you can see this is also the one thing I like about actually using the fibs is that it's not only the 50% is super. I think probably the most important without a doubt. But you get these other levels, and lots of times they come into play also. And you can see that this is a good case of where it came up and it's kind of rejecting off a little bit off of what is that, the 22.3, 0.4 retracement,
Right.
which is also another of those traditional important lines. let's hide that
There
because
was a question on a YouTube channel.
Yeah.
A gentleman asking what our thoughts are on zero DTEs, which is 0-day expiration options. This is where it gets tricky with a zero commission broker, and where you would rather have something like TOS for 0 days, because in TOS you can actually toggle on and let them know that you are in control and very aware of assignment risk on your 0 days credit spreads. 0-day debit spreads I don't necessarily trade. However, there is a conversion strategy for that, and I'll get to that in a minute. But first, if you try to sell an in-the-money credit spread on Robinhood, they will either A, not let you open it because of assignment risk, depending on situations, or B, when you do get it open, they'll auto-liquidate it for you, and usually it'll screw you out of a profit even if you were in the correct direction. I've had situations where I've been able to get away with it on Robinhood, where I can go and sell a credit spread in the money, and if price is volatile enough to break back through to where my short leg becomes out of the money really fast, I've been able to capture some massive profits on that, but I've got to immediately put a limit order on to close that position right after I open it, otherwise they will auto-liquidate it like that. So also I have to pay very close attention because they'll cancel my limit order, the bums, and then they'll try to liquidate it anyway. So I've got to be aware of that. The moment they cancel that order, I got to be right in there to set up another limit order, and just fighting with the whatever algo or whatever trade agent or whoever the hell is messing with me on this. I got to fight them to keep that position on. It's ridiculous. But what they don't do to me on a 0 day, and this is where the conversion strategy happens. With TOS, you can put a toggle box on and say, hey, I'm in control of this situation. I know it's an assignment risk. I'm trading a 0 day. Leave me alone. But with Robinhood, you can't do that. But what you can do, let's say you caught a quick reversal and you went and bought, let's say right now you bought a put just before that breakover. Out of the money, it's 0 day to expiration. And suddenly the value of that put goes above 100% return. So like, let's say you bought a put out of the money for 10 cents and suddenly it's worth 20 cents. Anything beyond that and the strike next to it will start to be above your cost basis. So if it continues to run down to the point where the next strike down you could sell for more than twice what you risked on the long position, you can convert a long puts position into a debit spread. But when you go to sell the short leg, you capture a profit between the two, and you cannot lose. You cannot lose that difference. That you can do, and the assignment risk is nullified, and Robinhood will not auto-liquidate that for you. So you can capture a profit on a single leg position by converting it into a debit spread. However, it's put on for a net credit. And what it does is, if you leave that position alone and price continues to plummet down, not only do you get that guaranteed capture of the profit between the two legs, you can get the difference between the two spreads. So like, you get the difference if they're $1 apart. You have a chance at making max profit if that whole thing expires in the money. You can actually collect, the whole width of that spread plus the profit you've locked into it. So it's kind of neat to be able to do that on 0 days. And with a commission-free broker, I'd rather do it that way. I would rather go and buy the leg that I think it's going to go to first, wait for the price action to take it there, and then just sell a leg against it. Another benefit is, if you have an account that is under PDT, when you make that conversion and it expires that day, and you've captured that net profit in there, and you just let it go, it does not count as a day trade if it's just either A, it expires worthless, or B, it expires in the money and you get a sign on the short leg. You still get to keep the difference because it'll auto exercise the long position to cover the short position. So you'll still keep the distance between the spread. So it puts you in a position for a guaranteed win with a potential for a massive win, all in one step.
Nice. That's a nice way to do it. I'd like to just again, we have another example of the same thing here. Is this short run on Nasdaq? You could see it formed out quite well. The Russell also put in a new low here after an uptrend. Big red bars on the Dow also, which is so when it came up here, back into the channel, retested the top of this line with the Russells putting in new lows. This was a really good short opportunity. I didn't want to break you off in the middle of it, Jeremy, so I wasn't going to say it. But yeah. But yeah, that was pretty much that might be that play played out because it hit the bottom of this channel line, which is if it's going to bounce around in this, which is possible. But we have continued weakness in the Dow, putting in new lows. Russell putting in new lows, and risky spot with the ES, not quite kind of decision candle. You can see how nicely that matches up to NASDAQ bouncing off the bottom of that channel which we put out earlier.
Right.
So that was that. That would have been that trade, which was a quick 3 minutes. And then now we get to see how it plays out. If this turns into a double bottom on the ES, and this one rejects off the bottom of that channel, which doesn't look like it's going to do, but some strength in the Russell, but the Dow is basically large caps, which everything is going to, if the large caps are falling off a cliff, everything else is going to fall off a cliff also, most likely.
Yeah, it's looking like things are starting to round over.
Yep. We could
Good
switch
morning,
out.
guys.
Good morning.
Good morning.
And there's,
They've done it.
then we got that happy weakness. But yeah, we could switch to just out of curiosity, see what you can see what trend and tick indexes are doing. Minus 700 first tap down. That's going to be some continued. That shows a lot of weakness in the market. Trin is at 0.95, and Nasdaq Trin is above. So this is kind of neutral. Trin for the S&P you can say is neutral, whereas Trin for Nasdaq is getting more bearish as we speak. And the chart reflects that quite well. I should have the ADD lines up also, but I don't have them up here.
This is looking to float that entire liquidity zone all the way down to 407, but
Oh yeah.
there's a midpoint at 409
And
that can kind of find support for a moment.
would that be around on the ES? That's about 4142, I guess. That's what I have marked out here.
Yeah, somewhere in that neighborhood.
Yep. What I'd be careful of here, if you're in a short position, is Nasdaq putting in a double bottom off the bottom of this or something, or right on the top of this whole doji candle here. We can actually mark that out.
Here's a pause candle coming up right here.
Yep.
Yeah, 410, that pauses the trend. Look for a retrace back to about 410.25, which is just about nailed. There we go. Can extend to 410.30.
You're not thinking of retest off this low back here?
We could see it hit 410.35 real quick. I'm just looking at the 5-second chart.
Let me get on the 5-second chart also.
I see these all the time. It'll go back to a control candle, and if you look at let's see here, the 10, 23, and 5-second candle, it's a bar.
Yep.
Top of that bar is at 410.35 exactly. So
Yep. That's a good spot.
And if you look at the 1-minute chart, we got the little pause there. Typically, this is where the pause in the trend would occur. And if I went short on the breakover if I was trading single legs, I would typically take profit right when I see that flash of green on a 1-minute chart, wait for this to reset back to a resistance point, and if it continues to break over, I'll get back into a short position or a put position with the same risk that I initially got into the first put on. So like if I paid, 25 cents or 30 cents for it or whatever, I would take my profit at the bottom of that, wait for this to reject, and then take the same risk into whatever strike happened to be at that premium and run the same risk into the trend. That way I've captured profit. I'm not risking any more than I initially risked, and I can continue the trend.
Yep. Let's see how this plays out now. This is we're with the
Here it is.
Nasdaq coming back up, right back up to the bottom of that channel again, which it was on before. ES retesting this low. This would be a great point to almost quite there. One more little push and then roll over again.
410.50 is where the 1-minute 8 period is as well, so watch for a rejection here.
Russell coming down.
And
Yep. Go ahead, man.
someone was asking also, is it worth trading options as it's a lot of intense thoughts? At first, it is. It takes a lot of head work to get this all figured out. Once you figure it out, though, it becomes very easy. And literally, it's just like riding a bike at that point. You don't have to think about all little details. You can just react and convert, or you can react and trade. The hardest thing to avoid with trading options is fear of missing out, and you can get into that situation pretty easily. You got to be very careful about that, because if you sit there and hold that option contract much longer than you need to, especially if it's a 0-day, it'll eat your lunch every time. It's kind of sad, but you can sit there and you get greedy even once, and you will shoot yourself in the foot.
Yep. Looking at Russell, a little bit of a double bottom here, micro double bottom on the 1-minute chart. Possible little push up. And then what we want to see is, if we're going to see it, is a rejection of the NQ off this line, or I'd be hands off right now. We still have the ES playing with that previous low, which is what I would think of as critical. ES broke back up through that previous channel. Now I'd switch over to the Russell just to see what it's going to do. And again, the same rules I did before. I'd want to see this put in a new low. What's been happening now is this, especially over the last few days, NASDAQ keeps pushing. Russell rolls over. Dow rolls over like it is now. ES rolls over. You can see the NASDAQ still pushing, still green candle. But then the NASDAQ rolls over and follows with. It hasn't been so much before. It was a lot more of there was some kind of switch. Well, actually, yeah. I mean, it's not hard to say. Over the last 4 weeks, the NASDAQ is up, what is it, 20% on the year or something like this. Over the last 4 weeks, it's been doing, I don't know what it is over the last 4 weeks. But the NASDAQ was pulling the everything else a lot more. But now, over the last couple of days, NASDAQ's trying to continue to push, and then everything else rolls over, and then the NASDAQ follows along. And I think it's a lot about being observant of, you get caught a couple times because you're trying to trade the same way as you were before. And then you notice that, hey, wait a second, NASDAQ's rolling over after everything else now. So then you have to switch quickly. So you get caught twice, and then you go, okay, shame on, fool me once.
Right.
Shame on me, but shame on
Right.
you. But fool me twice, and that's it. So here we can see the other three showed some weakness, and then the NASDAQ also. That's not really played out yet, though. That's not a clear. There's no clear signal there. Yeah. Again, it's Russell putting in a new low, which is the clear signal.
See something here.
And the S&P and or the ES and the NQ or the Nasdaq and SPY or S&P move together, you tend to get some pretty big moves actually. So this is always the like right now we have a lot of weakness in the Russell and the Dow, but if Nasdaq and S&P decide to move together, they'll pull these two along with them.
Very
So-
likely.
So that's a good opportunity to go long the Russell or the Dow when you see both these pushing. Right now, it's not any. There was a good little quick tick. That was nothing though. Yep.
Yeah, kind of eh.
Yeah, it's a little bit of a moment.
Sort of eh.
But that was if you had followed the S&P and Nasdaq going up together, while these two were still being weak. If you had taken that, I mean, it's still. What is that? That's 30 points in the Dow, which on a micro contract is what is that? It's a half. So it's $10, but if you take 3 contracts, it's a quick little $30 win on that
Right.
one. Nasdaq back up at the top of the channel, which it formed earlier, which is one we've failed before here. What's the ES playing around with? What do you have the ES playing around with now? It basically broke up through the previous, this little micro previous low here. This would be a good moment for a little pullback.
Well, we've got a 1-for-1 off that reversal from 401.95. First leg went to 410.50,
Mhm.
pulled back, accumulated. The 1-for-1 stops at 410.95, so it's already nailed that. Let's see if we roll over here or not.
What do you got in the 50%?
That 5-second chart's freaking wonderful. I love that thing.
Yeah. What's the 50% on this move is, we're right at the 50% of this one right now. See the Nasdaq's rejecting off the top of that trend line at the moment.
Yeah.
We can see that the Dow is also at 50% retracement basically of that move on the spot. And they're rejecting off of it all at the same time. Always nice. Hey, Jeremy, I wanted to ask you, if you were to take this, I don't know if you can see my screen. There's this trend in, which is from 1024 to, oh man, I can't even see my time. I gotta get rid of that. Sorry, man. Which was from 1016 to 1024. If you were marking out that trend for the 50% retracement, which worked out pretty.
Yeah, we just nailed it.
Yeah, we just nailed it. But would you have taken from the top of the green candle, which is at 615, or I mean, it's an insignificant difference. I'm just thinking like, we have a previous little high there, and sometimes I wonder which is the better part, the better thing to take for the trend. You know what I mean?
As for spotting where the retracement is.
Yeah.
So if you look left, you'll see there was a resistance line there from that first reversal. So you had that first low.
Mm-hmm.
It tapped off and came up to a resistance point
Yeah.
and accumulated. You could actually just plot it right there and verify that you got a 50% retracement line
Yeah.
in that extended trend.
Oh, you would take even from. Okay, I see what you mean. Yep.
Hey, can I ask a question?
Sure.
So right now, Cats, like you said, there's a 50% retracement, right? Now, during that 50% retracement, are you trying to look, get a long position until the 50%, or are you waiting for it to come back to the 50% and then see if it actually rejects there so you can go short?
I would be uh, looking.
Kind
Yeah,
kind
go
of
ahead, man.
both.
Yeah, it's kind of both. I would have said you're looking for a long position down here because you're not looking to buy really into a long position. If you broke through the 50% with some kind of conviction, and I saw something on the other indices that I was like, oh, everything is strong right now, I could go long there. But more likely, I'd be looking for a long position down here. If you can see my chart, I could see like on the Dow specifically, which I would have been looking for the long position there in. We have a lot of strength in the Nasdaq. We have a lot of strength in the ES. Dow is pulling off, but it's at a double bottom. So I would have been looking at that like, oh, hey, I have a bit of a double bottom play here. I have a lot of strength in the two major indices. I could go long here on this play. 50% would have been my point to get out. That would have been my first target. So if I had had like, I don't know, if I had had 3 or 4 contracts on, I would have definitely sold some at the 50% retracement line. And then it would have been a wait and see game, you know?
Right.
Gotcha.
Another thing I think of is it always is going to depend on what time frame you're trading, but when you see a retracement like that, there's one of 3 things that'll happen. The market loves to do at least a 1-for-1, so it'll either reject there and come back and test that low. There's your 1-for-1, or it'll extend into a measured move and complete 100% retracement of that previous trend. So either way, you get a 1-for-1 from there. You just have to trade the break and not the setup. So if you're trying to get the side of that correctly for day trading, look for the 1-to-1. So if it's going to reject here, you get a 1-for-1.
Jeremy, explain what
bearish.
1-to-1 is so that I don't think everybody's going to understand what 1-to-1 is.
So you get an equal move that reacts. So like if it rejects off a 50% retracement, you can get a 1-for-1 back to the previous low. So it's one leg up, you'll get a repeat in the opposite direction. You'll get one leg down. You can draw your boxes there. So if you get a rejection off of that, you get at least half of that previous descending trend back down to the previous low. So it's a 1-for-1 move. The 2-for-1 is a better setup because you have more stability and more ability to swing trade it. Not necessarily overnight, but like, if you're trading ES contracts and you hold it for more than 15 minutes, it almost considers it as a swing trade, and you go for a 2-for-1, you're looking for continuation below that previous low. So you could take this 1-for-1 entry and at least get the 1-for-1, but if you break that previous low, then you've got a 2-for-1. Typically, market maker moves are going to be at least a 1-for-1, and sometimes they'll set up for a 2-for-1.
And here you can see we have Nasdaq still playing around with this previous trend line coming up. So if it breaks through, this would be a break up, second breakthrough, or actually the third breakthrough because we have one here also. But everything is looking pretty bearish. Soon we're going to have the Russell putting in new lows potentially, which would mean it looks like this is rolling over actually. And here you can see a little bit what Jeremy is talking about right now. Also, you have whole move came down to the 50%, which you can see that we don't have to mark it out, right? We can put a line at the 50% there.
Yeah, it's kind of you can see it plain as day.
Yeah, we'll just put it. I mean, that's it. So it came down, came up again, and flushed off. If you go to a shorter time frame, Jeremy likes the 5 seconds. Let's switch to the 5 second. It'll be a lot cleaner, right?
Right.
Yeah, there we get it. Really clean. You can see. I can do another drawing on it. I think that was pretty spot on for the 50%, one 50% move. Let's see. Sorry. My drawing tools are being funny. All of our drawing tools are being funny now. Why isn't
Yeah, it's not just mine.
Yeah.
The man, it's the man. They're trying to put the kibosh on our technical analysis.
I think so, man. I'm not liking this. But you can see here. Well, I mean, you can see it. Yeah. And then we got the continued up to the 50%, and then we got a continued move down.
Big old break.
And here you can see
So
That would be a 1-to-1 right now. It just hit the bottom, right?
just nailed it. Yep, 1-for-1, perfectly off that rejection.
Gotcha. So I actually made a trade, but I don't know if I made it, if I was just hit, and I was lucky, or if my analysis was right. So what I did is as it was coming down in the previous rundown,
Can you give me?
I got a
Give me a minute, Mark.
I got
So just so I have the. You mean you were at 10:38 about or something?
yeah, no, 10:25.
So
Okay.
right off that rejection line. Okay.
Yeah, so I am trading the 5-second too. So I picked up 2 contracts at 10:25.
Two contracts
So
in the
as soon as I
ES.
saw it crossing the 9, well, what is that, 20? I think 20. 5-second chart crossing 20 EMA.
I can put up the 5
You got
second. Are you in the? You're trading
the-
the ES, right?
Yes.
Yeah,
Yes.
okay.
You got the signal off the 8 crossing the 20, it looks like.
Yes, exactly. That's where I picked it up.
EMA.
Was that a dumb move because it could have kept going down, I guess, right? Or should I wait until it hit like I say, break of the 49?
So the technical analysis was right. The timing wasn't the greatest, but you still got the rest of that move, and especially if you closed it when it hit that 50% retracement line. If you took your profit there, you did great.
I did, but I just wasn't sure if when the second I took the position, was that a dumb move or should I wait for some sort of confirmation?
You always want to wait for a confirmation, but you could have got it 2 ways. You could have got it earlier, like right at. So you got it right at 10:25.
I picked it up at 41.47 on the reversal, so 41.47, whatever that was.
Right, I mean the time, like right.
Yeah. I think it was 10. Yeah, 10:25. Yeah, exactly.
So basically, you traded this break. You traded the break higher here.
Right.
Yeah.
Right off
Right
of
there.
that tweezer.
Right there.
Yeah.
So if you got in at the right time, you got in just under the pivot. It came back and tested that entry for support.
Right.
Needed to trend up. So that's a pretty good entry. You could have profited right at like 10:26 and 10 seconds, or 10:26 and 5 seconds if you wanted to take a quick scalp. But right in that trend, back to the 50% of that previous descending trend, to the 50-cent mark. You had a couple times you could have exited on that. You could have went out right at about 10:33. You could also exited it over here at 10:36. So, yeah, you did a pretty good entry. Just sticking with it through that chop was a little nerve-wracking, I'm sure, because it could have broken over. So it was a little bit of a risky entry.
Yeah,
But,
that part, right? That part right there. It could have broke down and kept going down.
Yeah.
Right.
Usually, I think the usual rule is when it goes. I mean, now we're looking at a 5-second chart, so it's kind of hard. But you want to.
Right.
You actually want to. This is the perfect. This is the better entry was this one.
Right. Okay,
Because
that
it'll
makes
come,
sense.
it will come down and retest that. It'll go up and
Right.
then it'll come down and retest that, and then you get in. And if you're going to go long there, you go long. And if it's you get a really clear indication really fast. If it's no, we're going to go down. Okay, you're out. You know what I mean? And basically
Definitely could have avoided that stress right there when it was coming back down. Test it.
And basically your stop loss is at
Below that one.
previous low.
Below. Yeah.
Or actually, I don't know. People do that different. I don't really do that. If I don't feel comfortable, I just get out. But
Right.
that would be I think that just a little bit below that previous low would be the stop loss.
Sculpted that big bearish candle when it broke down, $32.
Nice. Awesome work. That was a good signal on that one for catching a really short-term candle. That was awesome.
Yep. Looking at the 5-second charts give me a heart attack, dude. I need to get off the 5-second chart. I need to
You get used to it.
Yeah,
You get used to
yeah.
it.
maybe. I don't know.
Yeah, at first when Jeremy mentioned it, I'm like, man, that thing is moving way too fast. I can't keep up with it.
Yeah.
But now I've been trading for a few days. I kind of see how it moves, so it kind of it's getting easier.
Yeah.
Yeah.
Well, I mean, my thing is that also you don't, when you're looking at the 5 second chart and you're used to like the 1 minute or the 5 minute, you think
Right.
you think that the significance of all the stuff on the left is more because there's a lot more noise in the 5 second chart. I mean, it's not, it's clean anyway, but I mean there is, so like, you know, if you're looking at a previous low on a 5 second chart, it doesn't hold the same weight as what a previous low on a 1 minute or a 5 minute is going to hold. So it's
Right.
it's a little bit it's really like you're trading like the last 4 bars and then looking for that, which freaks me out somehow.
I mean, when you get to the point where you're scalping 4 or 5 second bars at a time, you've achieved your goal.
Yeah,
But
you're in the zen. You're in the zone.
yeah,
Yeah.
when you go and you're doing it like 1 or 2 1-minute bars at a time, all it gives you is the ability to capture 1-minute candles and all the structure inside of it. So like you capture, 20 bars, you've got a 1-minute bar. So like if you can capture that move in 20 bars on a 5-second chart, you're doing yourself a favor by maximizing the amount of profit you can take off of 1-minute chart trade.
Yeah.
So you're getting exactly the signals you need to see to either go long or short, and you're scalping each and every 1-minute bar if you want, or if you see a trend forming and you can verify it on the 1 and 5-minute charts, you can get a precise entry on when to go long or short, and then just ride the trend.
Yeah.
So it gives you an advantage getting used to that 5-second chart to take your signals, but you don't necessarily have to trade the 5-second chart to achieve it. You can go and trade the 1 and 5-minute charts and just use the 5-minute as a verification of your signals that you're seeing on the 1 and 5-minute charts.
And that's where it's good to have, like you do. You have the 1 minute chart up also, so you can see all that what's going on to the left, and
Right.
you can be playing that at the same time. It's a disadvantage of having. I should put up more charts here. I just don't want to have them too small for everybody to see.
Casper, I trade the 10-second chart.
Yeah, 10 seconds also good. I mean, anything that works is good, man. You know, it's
Yeah.
just. I like-
If you can use it to maximize your day trading efficiency, doesn't matter if you use a 5-10 second chart. You could even use a 1-second chart if you're that crazy.
Yeah.
The whole point is you want to capture the most efficiency, and that's the bottom line. You want to maximize your risk to reward ratio.
Yep.
And if you capture your signals off of a very short time frame, that's exactly what you're doing.
Here we have one of these weird moments. Russell coming down, forming a little bit of a base here. Not a base, but it's coming up a little bit off this. And whereas Dow and the ES putting in something like a little bit of a double bottom here. Not a great trade moment actually, but we have the NASDAQ back into this channel again. So it would be bullish inclination on all 3 indices at the moment. All 4 indices at the moment. Just for a little short-term thing.
Yeah, it's looking bearish on the 15-minute SPY.
Oh yeah. Yeah, I'm just talking.
Like a bear fight.
Yeah, it is right. 15-minute chart. Yeah, but look at this long. See, you expect some kind of, look at the Dow and the Russell. You know what I mean? There should be some kind of retracement of this, even if it's just a little bit.
Is a pivot right there at 409.75, and it's like the upper 60% of that liquidity zone. So I wonder.
Yeah. No, it's gonna. I wouldn't. This isn't a good trade moment for me.
Nope, I'm gonna sit and wait for the break.
Yeah.
The bearish move would get a 1-for-1 on a 5-second chart if this broke over as a accumulation for a bearish measured move. That would take us down to like 409.20. But this can certainly bounce here and retrace back up to like 410.50. So be careful.
I think this looks a little bit trappy. Kind
Kind of does.
because we have on the NQ we have higher low, coming down and testing that the last low here. But we have lower lows on the ES. We have lower lows on Dow, and we have lower lows on the Russell. But it's just
Right.
yeah, it's just
It can't exactly be a trap.
yeah.
The only thing I can see that's relevant for continuing to have a bearish bias for the day, if you look at QQQ, it's got a really nice looking bearish bat on the 1 minute chart.
Let's check
That's
it
the only thing I can see.
out. Oh, it almost has a diamond pattern also on the 1 minute, huh?
It's like half a diamond, yeah.
Yeah.
It's the right side of it.
How do
So
you
if you build a descending channel out of that, you'll see that you've got
out of this? Wait, let me draw it. You mean this basically the triangle, right?
right.
Let me delete that.
So if you look at the second low, that's where your pivot line is, and then if you break that, you've got at least a 1-for-1 down from there. But that angular is also still support. So if like you're looking for the setup to complete, you want to see confirmation breaking that angular, and then you get your 1-for-1 going down. So
Yep, and that would basically you take that from the height this, right?
right.
Yep.
Or a much more simple way to do it.
Let's do the box.
Look at your 930 candles where you got 932 and 33. You got a little high there on the opening.
Mm-hmm.
Draw a trend line down from there and cross your second low and extend it.
Second low right here. Yep.
So if it's going to complete this as a bearish move, it can't break the angular resistance from the top of your wedge, but it's got to break the angular support from the bottom of the wedge. And if it does, it'll channel. There's your target.
Yeah. Is that a 1-to-1 though? That's not really quite a 1-to-1.
If it breaks bearish, it would be probably a quick 1-to-1 bearish measured move.
Yeah.
If you look at the previous touch on the angular resistance at the top of the wedge,
Mm-hmm. Here.
that's your leg. Yep. There's your
Oh
leg
yeah,
from
yeah,
there
yeah,
to
yeah,
there.
yeah, yeah. I see what you're saying, man.
And you get a 1-for-1
Let's take that.
right on the breakover.
Yeah, then we can move that down. That would be someplace. Oh, look at that. That really does work out pretty perfect. That's nice,
Yep.
man.
You can stack your boxes too.
Yeah.
So whether you're drawing angulars or boxes, dude, you can always see the 1-for-1s before they happen.
Yeah.
And then you can just be ready to take the trade on the break, and rather than try to get mixed up in the setup.
Yeah. That was pretty. That's some pretty intense eye drawing, though.
Yeah, it takes a minute.
Yeah.
Sometimes by the time you finish drawing it, the move's already
It is.
over with, or it's already beginning and you miss it.
Yeah.
So
Well, that's
the idea is practice drawing it so you can train your lizard brain to just instantly recognize that without drawing it.
yeah.
And you know where the 1-for-1 is. You could literally just take a box for that height and set it below, and then copy it and set one above. So if it breaks out to the bull side, you've got the measured move 1-for-1 up. Breaks out to the bear side, you got the measured move 1-for-1 down.
Yeah.
And then just trade the break. It's that simple.
And here we have the
So-
ES making new lows, Dow making new lows. ES, NASDAQ not quite following with yet. It's actually pretty good. I don't know, man. I hate getting caught in these bottoms, dude. You know what I mean?
Oh, I know.
You're
I
trying
know.
to trade this as like, oh, it's gonna go lower. It's gonna go lower, and then
Yep.
it just turns around on you. So
Well, greed and FOMO is what fuels those, and then yeah,
I've been caught in so many of those. I hate them.
yeah.
Yeah, same.
Mm.
but knowing where those angulars are will really save you from getting roped into those, because you'll get a 1-for-1 typically out of it anyway. You
Yeah.
just don't know what direction it's going to be. So if you sit there and wait for the setup to complete, once it breaks out, you'll know when it's breaking out, and then you just shoot for the 1-for-1 target.
Yeah. I'm still expecting some kind of retracement. I mean, I hear you. I'm just thinking that I'm expecting some kind of little something retracement on the Russell. It's
And we just broke out of the angular on the Q and SPY.
Yes, it's testing the.
It can still fail here. Watch for that to
Oh, yeah.
close a big wick. But yeah, Russell's still trending down.
Oh yeah. Oh,
Um,
this is definitely.
there was a question on the YouTube channel that says, how much technical analysis must one have to trade options? It's all going to start with price action. Yes, there's a lot more moving parts in options, but all you got to really think about is, can I get the direction right, and can I capture some profit here with minimal risk? That's it. So if you can capture the direction right, you just got to figure out what strike you're going to have to choose, find the best possible return in the shortest amount of time, and then either if you scalp in one leg, open it and day trade it, or if you want to do a conversion, you can open it, sell a leg against it, or you can open it as a spread, day trade it, or you can open it as a spread and convert it. You got many different choices you can take on that. So it's really just a matter of building from the basic strategy, learn how to master that, and then learn how to master a conversion strategy, a simple conversion strategy. And then if you get really good at that, learn how to master a more complex conversion strategy. It just makes your trading a little bit easier each time you get to it.
Yeah. All right, you guys. I'm gonna sign off for today. I need to
man.
get. I have some other work that I need to get to also.
Uh,
Yep.
And tomorrow, just kind of a note, I might keep it a little bit short tomorrow. That's actually my birthday tomorrow. So
Oh. Hey man, do you want me to take over for you, just so you can do your thing?
I can still be here in the morning. There's nothing really planned in the morning, but some early afternoon stuff for the family.
Yeah.
So
I'll cover whatever you want me to cover.
Party time for you tomorrow.
Yeah.
heck yeah,
Yeah.
heck yeah.
All right, you guys.
I
I'll
will
talk
enjoy.
to you later. And happy. How do you say in English? In Swedish. Grattis i förskott. I can say it in
There you
Swedish. Yeah. All right. Have a good one, man.
You too, man.
Garrett Casper.
Cheers.